Hello, my name is Andrew Pang. Welcome to another edition of CMS Forex News. Today's Wednesday, August 27th, 2008. In Australia, construction work done in the second quarter declined 2.6%. The figure for the first quarter, however, was revised up modestly to a 5% gain. High interest rates and a turndown in the economy have affected the housing market, though not to the same degree as seen in the UK or the US. New Zealand's business confidence improved modestly, posting a negative 20.5 for August compared to a negative 43.2 in July. With oil prices easing, inflation seems to be stabilizing, and business confidence may have a chance to rebound further. The Kiwi dollar pair rose 160 pips from yesterday's low. The rally started after Australia's construction data and extended after the stronger New Zealand business confidence report. The Kiwi pared its losses from its slide in early Tuesday trading. A positive U.S. release in today's New York session gave the greenback renewed strength, and the pair retreated. Import prices remained to be high in Germany during the July period, with the annual rate hitting 9.3%, the highest in 8 years. Energy prices continued to dominate the index, but July was the month that saw oil prices rise to $147 a barrel and have eased since then. On the month, prices were a cooler 0.6%. Germany also released its preliminary data for August CPI. Consumer inflation slowed to an annual pace of 3.1% and declined to 0.3% on the month. Those numbers came in below forecast and will be a welcome sign for the ECB. The EU harmonized rate slowed to 3.3% from 3.5% and also came in lower than expected. Yesterday, the euro was tested due to poor data from Germany, but the tables turned today. Overnight, the euro's prospects were boosted by hawkish comments from ECB Council member Axel Weber. He said that interest rates are where they should be, and the ECB may have to tighten rates after the economy recovers. The euro rebounded from yesterday's 6-month low to reel off a 180-pip counter rally. It hit resistance at the New York Open, where the dollar pared some of its earlier losses. The euro gained on the Swiss franc overnight, stopping a 2-day slide that amounted to almost 150 pips. European stocks came back from a rise in oil prices, and investor sentiment seemed to be returning to the market after a shaky start to the week. The euro also rose to its highest in almost 3 months against the pound, which had a very poor day today. The euro-pound pair rose about 80 pips as a stronger ECB puts the euro at odds with the weaker Bank of England. In this long-term view, you can see that the pair is now testing the upper boundary of its 3-month range near 0.8040. The pound has been in a free fall against its rivals in August, as the problems in the housing market are putting the economy on the brink of a recession. The pound-yen pair is down 1,150 pips since the Bank of England's last meeting. The central bank is feeling the pressure to cut rates, and the markets are pricing that in. The pound-dollar pair fell sharply in New York trading, as well hitting a fresh 2-year low. The U.S. was boosted by a report showing strong orders for durable goods in July. Orders increased 1.3% on the month, with June's level revised up as well. Orders excluding transportation surprised forecasts. Durable goods are more expensive goods designed to last more than 3 years. The dollar-yen had a strong move in the 30 minutes following the release, climbing about 80 pips. The dollar managed to hold these gains and climbed to 109.90 as U.S. stocks rallied despite a jump in crude oil. Tonight, Australia releases data on capital spending by the private sector. Overnight, the UK posted the nationwide house price index and a measure of manufacturing. Switzerland and Germany will release employment figures. Tomorrow, the US releases its jobless claims and preliminary measures of GDP. Canada will post its current account. And that wraps it up for the day in Forex News. Join us again tomorrow right here at cmsfx.com.